Imagine spending over $1,000 a month just to get to work. Well, get this. The average American spends 16% of their income on transportation alone, and that's more on what they spend on food. That's not for a vacation. That's not for a luxury. That's literally to sit in traffic, burning gas, so you can afford to pay for the vehicle. And that's the trap that most Americans find themselves in. And the worst part, they don't even realize. And it doesn't need to be this way. Today, we're going to break down why cars are silently bankrupting Americans, and more importantly, what we can do to stop the financial bleeding. I've got 6 solid ways that you can avoid the common expensive traps that catch out most people. And to get started, here are some of those traps, just so you know how bad it is. Cars used to be a symbol of freedom. Your first car, that was your rite of passage, your independence, the power, the possibility. And now that same car has become a financial anchor. And it's not just the car payments, it's the insurance, the gas, the maintenance costs, and the registration. And let's not forget the interest rates are still high. Now, according to 2024 statistics, the average monthly payment for a new car is $750. For a used car, it's $530. Now, of course, that doesn't include the gas, the maintenance, the repair bills, and the insurance. But here's the kicker. More and more Americans are taking out car loans that stretch over 6 to 8 years. That means you're paying interest on a car that's losing value every single day for up to 8 years. It's like setting your money on fire in slow motion. When you break it down like that and you realize how much money you're wasting, it can really put a sick feeling in your stomach. Now, to get this point across and to show you just how bad it can be, I'm going to give you a super detailed example. We're going to use Marcus. He's 28, lives in Chicago, and he's finally adulting. Marcus has bought a brand new SUV. Price tag, $43,000. His monthly payment is $710. Insurance, $195. Gas, about $250 a month. Toss in maintenance and random fees, he's easily $1,200 a month in. Now, after just a few months driving to and from work and the occasional weekend away, the vehicle is now worth $7,000. It's worth $36,000. Well, here's the punch in the gut. Although his vehicle has depreciated $7,000, he's barely made a dent in the principal payments. That's because, like a mortgage, your car loan is front-loaded heavy with interest payments and less of principal. Now, Marcus isn't dumb. He's doing what everybody else is doing, and he's also doing what the commercials told him to do. So what he's doing is normal. But just because it feels normal, it's not always smart. Cars are killing the American budget, quietly and ruthlessly. Now, here's why it matters. 64% of Americans are living paycheck to paycheck. Many of them have a car payment. Now, combine that with rent, groceries, student loans, it's an absolute pressure cooker. Your car should not be costing you more than rent or mortgage, but for many people, it does. Okay, I was editing the video in this beautiful sunshine, and there's something I need to add to the conversation that will bring value, and that's the impact of mindset and financial literacy when buying a car. You see, the conclusion I've come to is the standout fact that most people are buying cars that they can't afford. People are financially stretching themselves for that shiny bit of status. They want to look rich, even though it's making themselves poorer by doing it. And by contrast, you're going to find that rich people are doing the exact opposite. They're buying cheaper, older cars, and they're paying cash for them, not being trapped by consumer debt and taking out a car loan. So it got me wondering, if they've got the money, why is this? Well, they know the difference between an asset and a liability. They know the difference of looking rich and actually being rich. You see, rich people understand that most cars are a depreciating asset. It's not a cash-producing asset. And because of this simple fact, they limit how much money they put into it. Now, this doesn't include those flashy rich people you see on TikTok showing off their latest expensive car. These people are much poorer on a whole different level. People that value wealth and financial freedom don't need status symbols, and they don't need to flash their success. They have absolutely nothing to prove, and they're certainly not seeking validation. They worked hard for their money, and they're not going to waste it on stuff they don't need and stuff that doesn't produce value. Their mindset is focused on the future and how they can sustain successful, happy, and healthy lives. They have their priorities, and they're not going to be focused on how much BMW or how much Porsche that they can get with the money that they don't have. So it seems that poor people buy to impress, while rich people buy to progress. I just thought that was a valid point and something I wanted to add to the conversation. Hopefully it wasn't too windy. Now we're back to the rest of the video. Now, going over the example with Marcus and maybe reflecting on our own personal circumstances, we may wonder, why do we fall for it? Well, there are a few reasons why, and it almost feels like a bit of a trap. First of all, status. Cars are emotional. We want to look successful. We want something shiny, something new, something that makes us feel good. And advertisers know this. They don't sell cars, they sell personalities. They build whole personalities in their commercials, and they tap into human psychology. They know exactly what we want, and they play on those wants and turn them into needs. Second, convenience. Public transport in many US cities is not great. People feel that they need a car to survive. Growing up in London, UK, it was very different for me. We have hundreds of tube stations. We have trains, buses, taxis. We even have canal boats. In London, we are spoilt for choice. In fact, I didn't learn to drive until I was 28. Shh. In the US, the car is king, and for most people, it's a basic necessity. Third, debt is normalized. We made it normal to finance everything, but it doesn't mean it's a wise choice. These days, it's a sad fact that it's unusual not to have a car loan or a lease. People build the car loan into their basic financial baseline, along with the rent, the utilities, and food. It's embedded into our psyche to the point that we don't understand any other way to own a car. But all is not lost. I've got 6 solid strategies to get around this and reset ourselves financially. So here are the 6 strategies to avoid going broke over your car. Each one is tied to a common trap that catches millions of Americans off guard. Number 1, don't buy a new car. A new car will lose up to 20% of its value as soon as you drive it off the lot. Buy used, even just 2 years, it can save you thousands of dollars. It may take a search and you may need to travel, but it will be a wise investment. Trust me, there's no reason to ever buy a brand new car. It's one of the worst depreciating assets. Number 2, pay cash if you can. Pay cash, even if it's a $5,000 car. There's no loan, there's no interest, it's complete freedom. You'll be driving below your means, you'll be vehicle smart, but most of all, you won't be robbed by consumer debt. Number 3, if you finance, keep it short. Now, if you do need to finance, stay away from 6 to 8 year loans. It's financial quicksand. Try and get it paid off in 3 years. And another crucial point, make sure that car payment is less than 10% of your income. Treat any finance plan as your last resort. Be aggressive and pay it down like your life depends on it. Number 4, factor in all costs. Now, don't look at that monthly payment and think that's it. Don't forget to factor in your maintenance, your gas, and your insurance. This will give you a complete picture, and it will add hundreds of dollars more. This is very sensible and will allow you to make an informed decision. The worst position to be in is 6 months in, realizing you can't afford it all. Shop for insurance like you shop for the car. Now, most people will stay with the same insurance, maybe out of a sense of loyalty, but shop around. You can save $100, $200, even $300 a month. I know from my own experience, shopping around for insurance has saved me thousands of dollars a year. It is well worth doing. Number 6, reconsider the second car. Ask yourself the question, do you need 2 cars? Can you ride share? Can you carpool? Can you work from home a few days a week? Think of it like a second mortgage. Having 2 car payments a month will really suck out the financial life from your bank account. When we apply ourselves and think about it, there's usually another way. Not perfect, but definitely a way that will save you a lot of money. Now, I know what some of you may be thinking. That's fine for you, Robert, but I live in the suburbs. We need a car. We need to get around. I absolutely hear you, but it's not about being car free. It's about being car smart. And for this, I'm going to use another example so you can relate to it. And for this example, we're going to use Lisa, and she lives in Phoenix, which I hear is very nice. Lisa is a single mum. She has 2 kids. She used to drive a $37,000 crossover with a $620 a month payment. Now, after a financial scare during the pandemic, she traded it in for a 2011 Toyota Corolla, which she bought for $6,300 cash. Now, the car wasn't glamorous, it wasn't fast, but the car was hers. It was paid outright, and there was no interest payments. In the first 12 months of having a car, Lisa saved over $8,000 in monthly payments and insurance. Being savvy, Lisa put those savings towards debt pay down, her emergency fund, and even a little bit for her savings. If we apply ourselves and think outside the box, there's usually always another way. It's not perfect, but it's always another way to save money. And as Lisa found out, discipline today and thinking outside the box buys you freedom tomorrow. So if you're feeling car broke, you're not the only one, by a long shot, but it doesn't have to be that way. Now, if you need some help to help put together a budget each month to help with your spending and your costs, then check out this video right here. In the video, I'll take you through some payday routines, including my very own, and help you manage your money on a monthly basis. I'll see you there.